What's good, traders? Welcome back to another breakdown. In today's video, I'll be walking you through a full trade recap straight from buyers to execution using my candlestick profiling model. And if you have been following along, you already know we don't just trade setup, we profile the story behind every move. So let's get into it. Alright, first thing first, we're gonna start with the economic calendar, because for me, that's always the roadmap for the week. I always want to be aware of high impact news that could either give us volatility or completely disrupt the setup I'm looking for. So here is what I noticed this week. Monday, no major news. Tuesday, still nothing to worry about. Then on Wednesday, we've got FOMC meeting minutes dropping at 2 p.m. That's one to take note of. It's a market mover. Then Thursday, we've got unemployment claims at 8:30 a.m. And finally, Friday, no major news again. Basically, we've got a clean slate this week. Outside of FOMC and unemployment numbers, there is no major risk to my trades, and I can confidently approach the week knowing that from Monday to Friday, I've got decent condition for execution. Now that we've got the macro picture out of the way, let's drop down and start building our buyers from the daily charts. You already know I always start with the daily to identify directional buyers and anticipate what kind of day I want to trade into. So let's go into it. Alright, so here on the daily chart, if you've been following me, especially the video I dropped for free on my Telegram and some other platforms, then you already know I've been aiming for that 3,400 level as my buy side liquidity target on gold. And that's the key level I've been highlighting going into this week. And yeah, if we look at last week's price action, we closed with a strong bullish candle. So naturally, I'm expecting this week to continue that bullish thesis, reaching into that 3,400 liquidity level. Now, here's how I'm framing that bias. First, I'm using the equilibrium of previous week range as a key support. That EQ aligns cleanly with two down close candles to the left, and that's our daily order block. So that gives me even more confidence to frame a bullish scenario, as both the OB and the weekly EQ line up at the same level. That soon become my high probability reversal area. If price respects that, I stay bullish. But if we break through and violate that zone, that's where I either step aside or reassess my bias, and that becomes my bullish invalidation. Now, going into Monday, I'm expecting a bullish daily candle, ideally an open low high close structure. Why? Because Thursday's NFP tapped back into the daily fair value gap and held. Then Friday followed through with a bullish close. So based on that, Monday should either open and run straight to the upside, or we could see a little dip first to sweep some sell side liquidity before reversing bullish. Either way, my bias remains the same. I'm anticipating an open low high close day. Alright, now that we've built the higher time frame idea, let's drop down to the 4-hour chart to start building the intraday narrative around this bullish framework. Alright, now over to the 4-hour chart. On the right side, you will still see the daily candle just for reference. That gives us context. So what I'm doing here on the 4-hour is simple. I'm trying to profile the daily candle through a 4-hour swing. I want to identify where the low of the day forms, which cycle of the candle print it, so I can anticipate when and where the expansion is likely to kick in. If you look closely at this price action, you will notice we opened during the 18 o'clock Asian section, and that's typically the first candle of the new day. From there, price dropped and swept an old low right into the equilibrium of last week's range, which by the way is our higher time frame key level. Then at 6 a.m. during the London section, we formed the low of the day by sweeping sell-side liquidity and immediately reversing back inside the range. That gives us a clean C2 closure, and that's our reversal confirmation. Once I add that, I started anticipating a C3 expansion in the next cycle, which is the 10 a.m. New York candle. And if you shift your eyes to the left, you will notice clean equal highs sitting there and right around the Asia high. And that became my intraday draw on liquidity and also my short-term targets. So now that I've identified the likely expansion candle, the one that's going to carry the move, it's time to drop to the hourly chart. I want to look for clean intraday confirmation and structure to profile myself into the move. Alright, so now we are here on the hourly chart. And what I'm doing here is confirming the intraday structure. I want to see a clean alignment in direction of my higher time frame bias. And if you look closely, you will notice that after price dipped into the previous week's equilibrium, which again is our key level, we had a clear change in state of delivery. And that's when we got a body closure above the candles that ran into that liquidity. That shift confirmed the reversal narrative. And right after that, we get the 10 a.m. candle, and that's end up being our expansion candle. Remember, this is the same 10 a.m. candle that forms the 4-hour C3 body, and that's my cue. I know expansion is likely to occur inside this move. So what I'm doing at this point is watching the 10 a.m. opening price, and I want to position myself inside that candle's range. My goal is to profile myself into that expansion body, not chase but position, and aim for a clean buy-side liquidity target sitting at the previous equal highs. And that's the structure I'm trading. So now let's drop down to the 5-minute chart, and I will show you exactly how I executed the trade. Alright, now let's break it down on the 5-minute chart. This is where the actual execution happens. So what I'm usually looking for here is simple: a liquidity sweep, a change in state of delivery, and ideally SMT divergence. But in this case, we didn't get SMT, and that wasn't a clear liquidity sweep either. But still, based on the confirmation I already had from the higher time frames, especially that 1-hour shift and the 4-hour expansion setup, I had enough confidence to pull the trigger because London had already done its job. The reversal was set in place, so by the time New York opened up, I was expecting continuation and not another deep retracement. And that's the key, because when expansions want to move fast, it doesn't wait around. So once we got that 10 a.m. open, I watched for the change in state of delivery. Price gave us a clean body close above these down close candles, and I entered right after that confirmation. I placed my stop loss just below the low that formed the change in state, and that's my protected swing. And I aimed for 3R in direction of the expansion candle. But in this case, I closed manually around 2.5R, and we ran into that buy side intraday liquidity. It was a setup for me, but yeah, it was a clean trade. So now let's move on to the second trade, the one I took on Wednesday. Let me walk you through that setup next. Alright, so we are back on the daily chart to profile Wednesday's price action. Now, if you look closely, you will see that on Tuesday, price dropped below Monday's low, but I actually did not take any trades on Tuesday. And here is why. Tuesday opened up and first ran Monday's high, and that's not something I was expecting. If we were truly going to continue this expansion to the buy side, I wanted to see price open and drop below that open, not run buy side liquidity right away. And this sweep above Monday's high, it happened early, right inside the Asian section, and that's usually a signal to me that we've already formed the high of the day. So that was my early invalidation. I stayed away from Tuesday entirely. Now, later in the day, Tuesday did drop below Monday's low, but the key thing here is it didn't break down and continue. It swept the low and closed back inside Monday's range. That's important because if price had closed below Monday's low, I'd be expecting more continuation to the downside. But since it snapped back inside the range, that gave me a reason to anticipate a reversal. And keep in mind, all of this is still happening within the equilibrium of last week's range. That's a key level I've been watching from the start of the week. So the fact that price is respecting that level and Tuesday gave us a sweep and close back in setup candle, this tells me to look for bullish continuation into Wednesday. So my expectation going into Wednesday is simple: open, form the low, and give me a bullish close and the open low high close candle, a classic reversal structure. So with that in mind, I dropped to the 4 hour to build a narrative around this bullish bias and look for where the expansion might start from. So let's go to the 4 hour chart. Alright, so I'm right here on the 4 hour chart, and again to the right, that's just a depiction of the daily candle that we are building off of. Now, if you look closely, you will notice price opened up and once again ran below Tuesday's low, and that's another sweep of sell side liquidity. After that sweep, we then get a reversal signature, a classic 3 candle pattern, and this happened right inside the London section. That was my signal. That pattern confirmed to me that this is likely the low of the day. And since I'm already coming into the day anticipating a bullish reversal, remember, based on the daily. So this 4 hour reversal setup aligns perfectly. So now, what I'm expecting is simple: continuation. I want to see the next 4 hour candle expand, ideally inside the New York section, and that's my 10 a.m. expansion candle. So now that I've got my 4 hour reversal signature and I'm expecting expansion, I drop down to the 30-minute chart to profile myself inside that 10 a.m. candle and look for my entry. Let's go to the 30-minute chart. Alright, so right here on the 30-minute chart, this is where I'm looking for my intraday structure to align with the bias I already built from the 4 hour and daily. Now, the goal here is to profile myself inside the expansion candle, which happens to be the 10 a.m. New York candle. But first, I need structure to support that. If you look closely, the red line here marks a sweep of sell side liquidity, and that was my first sign. And right after the sweep, we got a change in state of delivery. A body closes above the candles that swept liquidity. Now, price dipped again and almost ran the low, but we had SMT divergence. The correlated pair took the low, but gold made higher high, which added to our bullish confluence. Right after that, we got an intraday CSD, and immediately after, a fair value gap printed. Now, that fair value gap became my intraday key level. Price retraced back into that FVG, and I executed right there inside that candle. That candle is not the 10 a.m. expansion. It's actually 9:30. But since I've already seen the structure lined up and I've got my entry logic confirmed, I don't need to wait. So I execute off the 30 minutes FEG ahead of the 10 a.m. expansion, and I'm aiming for the smooth high that intraday buy side liquidity. Let's drop to the 3 minutes and break down exactly how I profile the entry on that smaller time frame. Alright, so now we are on the 3 minutes chart, and again I'm keeping it simple. I'm looking for 3 things: a liquidity sweep, a change in state of delivery, and ideally SMT divergence. This shaded rectangle here marks the 30-minute fair value gap, and that's our intraday key level. Price run into that level, swept sell side liquidity right inside it, and then respected that level. Right after that, we got a clean CSD, a body closure above the candle that ran the sell side liquidity. That's my entry trigger. Soon as I spot that change in state, I enter on the next candle open, place my stop loss right below the low that created the CSD, very tight and logical. And from there, I'm aiming for 2R in direction of the anticipated buy side liquidity. And as you can see, price ran straight into the target, executed clean with no stress. So that's how I caught a clean 2R of this setup. High quality. It's a A+ trade for me because everything lined up from the higher time frames down, and I just profiled myself into the move. So yeah, I ended up not taking any trades on Thursday or Friday, and that was just due to personal reasons. But overall, price delivered beautifully throughout the week. And that's pretty much everything for this week's trade recap. Now, just to quickly reflect, we started off with a clear daily bias, aligned with key levels, profiled the 4-hour structure to find where the low of the day might form, and use that to position inside the expansion. Then we drop down to the hourly and minute time frames to find high quality entries with tight stop loss placement and logical targets, all in the direction of our higher time frame narrative. So 2 clean trades on gold this week, nothing forced, everything framed with intent and executed with clarity. And if you are not in the Telegram channel yet, you are missing out. I also share some of my execution for free over there in real time, so make sure you tap the link, subscribe and join the community. And if you also need the PDF to this week trade recap, you also find it in my Telegram channel. So drop a comment below, let me know what you think of this week's breakdown, or share how your own week went. And of course, don't forget to subscribe. We've got more hits coming every week. Alright fam, stay sharp, trade clean, and I'll catch you in the next one.